All right. Thanks everyone for joining today. I know we have a mix of attendees from all over. I think we're kind of leaning more towards Alberta attendees today, but we also have attendees from British Columbia and Ontario. So thanks everyone for joining. Plan today is to talk about selling in a hot market, which is really across the country what we've seen over the last, well, depending on what region you're from, really for quite some time. And certainly in Alberta over the last 2 months, we've seen a very hot real estate market. So I believe we have Lindsay on the call as well. She's going to moderate the chat. So in terms of housekeeping, if anyone has any questions throughout, over time, I found that we've really shifted these presentations from, being us presenting to everyone to being much more collaborative. So Alan, if you agree, I think I'd like to get through the material relatively quickly, and then we can spend more time answering questions from everyone that's on the call. I find that often organically we get a lot of good information out just by organizing that way.
Sounds great, Jeff. And just to let people know, feel free to get your questions in as we go. And if it's appropriate for what we're talking about, we'll try and answer it in the middle of the presentation. So don't feel like you need to hold off until the end. Feel free to get your questions in as we go here.
Yeah, perfect. All right, let's get started. Really the topic today is obviously how to sell your home yourself, but specific to the topic of how to sell your home yourself in a hot market. So going to chat a little bit about current market conditions. Again, there really isn't a Canadian real estate market. Every province performs quite differently. What we've seen in Alberta over the last 2 months is quite typical of what the real estate markets of Ontario and BC have experienced for quite some time. But across the board, what we're seeing is record numbers of sales, very low inventory, and homes are selling really quickly, often with multiple offers. And the other thing that we're seeing with a lot of our seller listings is that they're receiving a lot of unconditional offers. Again, something very typical in Ontario and BC, but something that we haven't seen a lot of in Alberta. So in some of those provinces, you'd refer to those as subject-free offers. Stepping back and looking at the Canadian real estate market as a whole, to put some perspective on just how crazy it has gotten and how quickly that has occurred. If we consider about a little over 2 years ago, call it January 2020, the average, which I would consider as the last month before we were living in a world with a virus, the average price of a home at that time was $504,000 across Canada. You fast forward to today, that average is now $750,000. So that's really unprecedented. We've never seen in 2 years a price increase of 50%, and that's driven by a lot of factors, and the pandemic really driving a lot of that change, the demand. So we'll dive into that a little bit more in this presentation as well. So just to kick things off, what we'll do is just chat a little bit about one example that we had recently. So what I've put up on the screen is an example of a sold by homeowner home that our brokerage had listed just outside of Calgary and Cochrane. And this seller was really self-sufficient. They did everything on their own. They used sold data to determine their listing price. After looking at 2 years of sold history in their neighborhood, they determined that a fair, competitive, but, fair listing price for this home was $575,000. They used that number, went to market. We did strategize with this seller at one time. We knew that it was going to get a lot of activity off the bat, and they were priced competitively enough that they were going to have a lot of viewings. Ultimately, the homeowner sold for $45,000 over the list price. They had 6 offers, and the winning offer was subject free. So we joked with the seller a little bit. They basically spent the first day of being on the market at the Tim Hortons down the street because there was no time to be at their home. They had showings lined up one after another for several hours. And what's interesting about this one is that, we often talk about how much value a seller might put on a subject-free offer. And in this case, the seller was prepared to accept an offer at, I think it was about $620,000 or $625,000. And while they were in the process of accepting that offer, another one came in at $640,000. And ultimately, they still accepted the lower offer. So in this case, the seller valued that subject-free offer. The one at $625,000 had no conditions. The one at $640,000 did have financing and property inspection condition. And they accepted the lower subject-free offer. So in this case, the seller valued the fact that there was no conditions to the amount of $15,000, which is kind of pretty typical of what we see in the market. That certainty of knowing that once you sign that contract, you have a done deal.
Yeah, and that's the key factor there, Jeff, isn't it? That the offer that has no subjects is a certainty. You know that deal is done as soon as you sign it, versus an offer that does have conditions or subjects. You're uncertain as to whether that's going to ultimately end up in a firm deal. Obviously, it does most of the time, but it's that premium that you're willing to accept for the certainty of the deal being done, exactly like you said.
Exactly. So one strategy that we want to talk about is something that we're encouraging a lot of our sellers to do, and we're seeing it a lot in the marketplace right now, is when you expect to receive multiple or competing offers, a lot of our sellers are choosing to set a date and time to review those offers. So, if we just use a hypothetical here and say you go to market on Thursday, and you have a lot of showings off the bat, you have indications that you're going to be receiving one or more offers. What we do is we encourage sellers to set a date and time to review those offers. And what that does is really levels the playing field for all buyers. And they know that all offers are going to be reviewed by the seller at a certain time. And we simply have our sellers fill out a really simple form, and then we disclose that to everyone on Realtor.ca and on the private agent system that offers will be reviewed, say, Sunday at 7 p.m., which is quite a typical time. Allow everyone an opportunity to view the property and put their best offer forward. So it's a strategy that we're seeing utilized quite often in a hot market. One thing that we often get asked about are these bully offers. So if you are a seller and you say, okay, I'm going to review all offers Sunday at 7 p.m., do you have to wait? Or because often what will happen is you'll get this offer come in, and they're referred to in the industry as bully offers. So that offer will come in and it will expire before your set review time. So let's say you, again, are planning to review all offers Sunday at 7 p.m. and you get an offer that comes in and says, this offer is only open until Sunday at noon. So we would consider that a bully offer. Of course, if everything is agreeable, you think it's a great price, you don't want the risk of losing that offer, you can always choose to accept an offer in advance of your set review time. Of course, if you don't want to do that, there's a good chance that buyer will still compete. So that buyer will extend their offer and make it eligible for the time that you're going to review all others. So one other strategy that we talk to our sellers a lot about is just how you can go about encouraging offers without conditions. We're seeing this more and more, and I think about it in my situation. If I were to list my house in this market, it's not totally inexpensive. It would cost between $400 and $600, but I would get a pre-listing inspection. And the reason I would do that is to encourage more buyers and to give them the peace of mind to put forward a subject-free offer. So a pre-listing inspection, again, very common in some provinces, not so much in others. But basically what you do as a seller is most offers are going to be conditional upon a home inspection. And what you can do is do this work up front, pay for it yourself, and make it available to any buyer that has interest in your home. So, it's third party, it's credible, and what that does is allow a buyer to ultimately do their due diligence before placing the offer. So providing their financing is strong, a lot more buyers would be comfortable making a subject-free offer, knowing that they've been able to review a property inspection, PDF with photos. Alan, maybe I'll just pause there. Is there any questions relevant to what we've been talking about that we want to cover at this time?
Nothing relevant for what you've gone through there, but just to remind people again, feel free to enter your questions in the Q&A section there, and if you enter them as we go, we'll try and answer them. Otherwise, we'll answer everything at the end. But do get them in the Q&A section there. You can ask any question you want.
Perfect. So yeah, maybe with that, I'll hand it over to you, Alan. So Alan's going to walk everyone through just the pricing methodologies and really why it's, even in a hot market, still really important to start with an accurate list price.
Great. Thanks a million, Jeff. Yeah, what key point here is that a lot of the same principles apply, whether it's a hot market or whether it's a balanced market or whether it's a cold market. And one of the key principles is to avoid overpricing your home when you first list your home for sale. And what we've seen over the years in the industry so many times is people overpricing their home initially, and that ultimately leading to them getting a lower price. So what typically happens is people think to themselves, well, if I start off with a high price, it's easier to come down than it is to go up later. So if I start with a high price, I might actually encourage people to place a higher bid. But typically that's not what happens. So looking at this chart here and starting off in the top left-hand corner, when someone does set a high price initially, typically what happens is they stay on the market for a period of time. They don't get the interest that they were hoping for. And so they start making some small price cuts. So that's what you can see on the number 4 there. And then they do kind of eventually, after making a series of price cuts, get down to their actual market value. But even though they're now at their actual market value, it's possible that their home will sit there for sale even though it's priced right now. And the reason for that is that people will see that it's been on the market for quite a while and it hasn't sold. So they start to think there's something wrong with it. And so what can happen is that the seller needs to now lower their price below market value or get it a little bit in the deal category for it to ultimately sell. And that's not somewhere where you want to be. A much better strategy is to try and price your home at market value at the beginning. And we see people finding much greater success when they price their home at market value, or even people often worry, what happens if I undervalue my home and slightly underprice it? Well, from our experience, we see that actually tends to work out better than those people who overprice it initially. And that's often how you can get people who end up with these huge prices above list. And the reason for this is really on the next slide, which is why doesn't overpricing work, and why is it that you want to come to market at the right price? Well, a stat that I think not very many people realize is that 50% of homes listed on realtor.ca with realtors fail to sell. If you look back over the last 12 months or more, that's the case in pretty much every market across Canada. And I think that's a huge surprise to people when they first hear that. People, I think, intuitively think most homes that go to market, that get listed for sale, that go on realtor.ca, I think they tend to think to themselves, well, the vast majority of those will sell. But 50% of them typically will fail to sell, and they'll need to be either relisted with a different brokerage, or they will be taken off the market and find another solution, or ultimately not selling. And even in this really hot market, that number is still very high. So we're seeing in the most recent few months here, it's not quite 50%, but it's still 30 or 40% of homes that won't sell once they've been listed. So again, the number one reason for that is that people are starting off with prices that are too high. And the next slide gives you some, I guess, more data here about why is it that homes that get listed too high don't sell. And it's because buyers tend to not make lowball offers. They're discouraged by the realtor that they are working with, and they're also worried, particularly in Canada, about offending the seller by submitting an offer that's perceived to be, too far below list. So the stat here, which again applies all across Canada, is that the average sold to list price ratio across the country is about 97%. Again, in the last few months in this hotter market, that is creeping up. But what this stat gets towards is there aren't very many examples of homes selling at 90% of list price, or 93 or 94. So generally, it's pretty close to list price. Obviously, there can be examples where it's above list price. But if you look at the data, it's not very often that a home sells for a big percentage below list price. And that's really because buyers aren't willing to make those lowball offers. They're discouraged by their realtors and they're afraid of offending the seller.
Yeah,
so
we
again,
see examples of that, Alan, right? I'm thinking about a few of the Calgary examples of the last few weeks, and one of the detached homes we had listed in the Riverside area. The seller had listed at 550, and ultimately sold at 505. But in order to sell at 505, had to kind of make those price decreases, right? 540 to 525. And ultimately that sale at 505. And when the deal was done, he said to me, he's like, why didn't someone just offer me 505 at the beginning? And I said, well, in general, we have a really polite economy in Canada, and people are, and as you say, realtors will discourage lowball offers because from their perspective, it's a waste of their time to put in a lowball offer and maybe damaging to their reputation. But in general, we've seen that buyers are just cautious to make lowball offers. And I know the one offer or the one listing that you were really close to, Alan, that sold recently too. The seller actually reduced to a place where we all felt was market value. And as soon as that seller got to that place, it then sold for over the list price because she was actually in the market, and at that point, there were several buyers who were interested. So then she was dealing with competing offers.
Yeah, and again, that's such an important point there at the end of the competing offers, is that's really the best way to maximize your ultimate sale prices. If the more you can have competing offers, the better chance you are going to be able to sell for a better price. And the best way to encourage competing offers is to price your home as close to market value as possible. If you price it too high, maybe you get one offer, now there's no competing, and you're not going to end up with as good a result as if you had got the price right from the beginning.
Yeah, absolutely. So we've covered kind of the importance of setting the right list price, but maybe just really quickly, what we'll do is look at a few of the tactics that you can use to ensure that you are setting the right list price. So we'll jump out of this presentation, but really quickly, we'll just say, the most important tool that you have when setting an accurate list price is by looking at recently sold listings in your area. So we'll show you exactly what that looks like on our website if you haven't created an account to do that. And then the other thing you want to look at is comparable active listings. So in essence, this is your competition. This is what you are competing with other sellers for to attract the right buyer. And then a third tool that some of our sellers use is the Canadian Real Estate Association Home Price Index. So really quickly, I'll show you where to find that and how that data can be interpreted. So, there are other data points. Often we get asked about tax assessed value, and I think some years, some jurisdictions, tax assessed value proves to be a good metric for value. oftentimes it's not very accurate. But again, you never want to use any of these data points in solidarity. You really want to look at them in aggregate so that you can triangulate your home's value. I'll just jump over here. Can we see my other screen now, Alan? Or?
Yeah, looks great.
Okay, perfect. So this is our website. Maybe before I show everyone sold data, I'll just jump in really quickly to show you what the listing process looks like. So when you go to sell and then sell your home, we will hit this get started button, and then you'll be in the listing flow. And I'll just show you exactly what that looks like for a listing that's already underway. So it's really quite a simple process. We ask a bunch of details about your property. You'll get down to a spot where we link you to the photos and measurements flow so that we can send out a professional photographer, of course, all at our cost. So there's no cost up front to working with Bode. We look after any MLS or Realtor.ca fees, the cost of professional photographs, and the cost of professional measurements so that we can advertise your property accurately. And then only when you're successful in selling does our office earn a 1% fee. So the process is quite easy. If anyone needs any help, we have a full team of customer success to help with this process. And yeah, we'll just jump over and show everyone the sold data tool. So as you're looking for sales comparables for your property, there's kind of two ways that you can use the sold data tool. The one is, let's consider a scenario where your next door neighbor just sold and you think it's a reasonable proxy of value for your home. You can use sold data by address. So just using that same example, we can select, you can type in an actual address. And here you can see that property is mapped. We can see that in some markets, we have 2 to 3 years sold data. In other markets, we have up to 12 years of sold data. So we can see that in this circumstance, this home has transacted twice over the years. We can see that it sold in March of 2020 for $740,000, and it sold in March of 2011 for $610,000. So that's one way of using sold data. The other way is by looking more on a community level, and this will be more common if you're not just trying to find one particular sold data metric. If you're actually looking on a community level, we'll have a look at that. So here you can select the province, the city. We'll stick in that same area of Altador, and you can select the sold period. So we'll go back 1 year. You simply hit apply. And as soon as this button is done moving, we can see that all of the sold data for the community of Altador is presented to us. We can click into any listing and we can see usually the lead image if it's available. We can see the sold date. So this property sold March 30th, 2021. We can see the list price was $799, and as is quite common in today's market for semi-detached and detached homes, it sold over list for 103% of the list price. So one other tool is our comparables tool. So our comparables tool, again, found in that same dropdown under sold data, comparables. It's a pretty unique tool that allows you to get an objective view of comparable homes to your subject property. So again, sticking out with that same example, all you need to do is input your address, the property type, in this case, a detached bungalow that was built in 1955 with 3 beds and 2 baths. As soon as you have that information, you hit apply. And what our system will do is look across all of the data that we have in our system and say, okay, based on the information you've told us, these are the most comparable sold homes. We can see 3907 15th Street Southwest is an 88% match we know that it's 265 meters away from the subject property. It has one fewer bedrooms, same number of baths, and it's sold for $618. Likewise, we present the same information on active listings. So now you are looking at, okay, if I was to go to market today, what other homes on the market am I competing against, or would a buyer also have interest in? Final tool you might choose to look into is the Canadian Real Estate Home Price Index. So it's really easy from a Google search. Just hit search that term, and you'll be directed to the Canadian Real Estate Association. And here you can actually download the data. So we have a lot of folks who really want to dig into the data. And this will allow you, anyone from the public can access this information and allow you to download a spreadsheet. So what the home price index tool is essentially, I think it was January 2005, the Canadian Real Estate Association selected 65 markets across Canada, and they said, okay, everyone is assigned this index of 100. So it doesn't matter if you're Calgary, Edmonton, Vancouver, Toronto, everyone was assigned an index of 100. And then they tracked a benchmark homes. So a benchmark home, it really varies across geographies in the country, but they track that index. So and they also tracked different property types. So apartments, single-story houses, two-story houses, and then an aggregate. So what this allows you to do is, say you bought your home in June 2014, you could go in and say, okay, the 2014 index, and all this data would be available to you, was say 145. And then you can fast forward to today and see that index is 165, and apply that delta to what your home might be worth today based on what you paid for it. So again, one other tool that you might choose to work with. Was that clear, Alan, or anything to add on HPI?
That's great, Jeff. Maybe you can just point people to where they can see that same information in our blog. So to find all of the price trend information in our blogs here.
Yeah, so just in the foot of our page, in the footer of our page, if you select blog, Alan puts together a market report every month, and it usually comes out about 5 to 10 days after the first of each month. So if you click into here, you can see that we break it out by region. So we've got Edmonton, Vancouver. Here we have Calgary. So we'll click into this, and then it's the home price index is included here as well. So if we look here, we've got all residential property in the city of Calgary. And this is, again, so if you look back to January 2005, that index is exactly at 100. And it was an interesting time for Alberta there. We saw this surge in energy prices. I think around 2006, 2007, WTI oil was trading at about $140 a barrel. So our real estate market was very hot at that time. A lot of people compare today's market to what we were seeing back then. Then, of course, the U.S. credit crisis hit, and 2008 we saw this massive decline. We built back up to those levels in 2014, where really, in Alberta at least, we saw another peak in the market. So about July of 2014, we saw a very hot market in Alberta. And then we've been a little bit stable, a little bit down until you see the impact of the pandemic. And here it's been a mix of a lot of factors. The pandemic has really changed buyer behavior. As soon as the pandemic hit, where you lived really, your preferences changed. People wanted more space. They often wanted yards. Home offices, home gyms became very important. And the appeal of living in an apartment downtown really diminished. I think a lot of the trade-off of living in an apartment in any city, whether it's New York or Vancouver or Calgary, is that you accept the trade-off of living in a smaller space for all the amenities, like, you might have a Starbucks on the main floor or a boutique fitness studio nearby. But when all of those things are closed, living in that apartment is not quite so attractive. So we did statistically, we saw an urban exodus. So communities outside of downtown cores performed really, really well. Of course, buyer preferences is not the only thing driving this. Really low interest rates. We've started to see now in March, we saw the Bank of Canada start to increase the overnight lending rate. I believe they meet again the second week of April, and the market is very much expecting at least another 25 basis points increase. The Bank of Canada really has to do something to curb inflation, and this is their tool by which to do that. So a lot of buyers, especially if they have 90 or 120-day rate holds, they are driving demand because they want to secure this house while they still have these really attractive and historically low interest rates. So you can see here, we saw this huge surge in both the index and also the benchmark price of homes. So yeah, if there's no questions, we'll just jump back into the PowerPoint.
Jeff, just to let you know, we do have some questions here. They're just not relating to the current part of the presentation. So if we wrap up here soon, we can start covering off some of those questions.
Yeah, sounds great. Well, I'll just quickly summarize, and then we'll jump into the questions. So quickly to summarize, there's very strong demand and very little supply. I know, Alan, in your most recent market report, you noted that in some of the markets that we service, the listings have increased a lot, something like 80% higher than 3-year averages in some of the markets. So, as much as inventory is low, a lot of sellers are starting to bring their homes to market to take advantage of the, call it, what it is. It's really a frenzy. So our team is happy to help manage multiple offers. We know that can be a bit of a stressful time, but with the support of our team, we know that we can help our sellers achieve the best price. Of course, it's important not to forget that it really is still paramount to start with an accurate list price. And as Alan covered, overpricing is the main reason for not selling or selling for below what is actually market value. So with that, maybe I'll just make a quick offer. At the end of this presentation, we're going to send out an email with a link to my calendar. So if anyone has any questions that are really specific to their own property value or listing strategies, I'm happy to arrange a call with any of the attendees today.
Brilliant, thanks, Jeff. We've got a ton of questions here to get through, so I'll start going through them. First one, I'll try and bucket them together where I can, but otherwise it might be a little scattergun here. First one's from Leslie. So Leslie'd like to know more details about the pros and cons of offering a buy-side realtor commission and what the different options are there.
Yeah, great. You can't see my screen anymore, right? I'm stop presenting?
That's right.
Okay, perfect. Yeah, so a lot of our sellers choose to offer a buy-side commission, and the reason they do so is that they want to ensure that they get the best of both worlds. So everything that we do at Bode is really focused on attracting buyers that don't have representation, and we're really the only tech-enabled brokerage that allows buyers that don't have agents to make offers online. So they can message you directly as a seller, they can request viewings directly with you without going through a middleman, and they can effectively populate an industry standard contract all online. Now, because of the way the industry operates, a lot of buyers, still have representation. So a lot of our sellers will offer a typical commission, but they know that they're way more likely to attract a buyer that doesn't have representation by working with our brokerage. So, if anyone on the call watched the CBC Marketplace report probably about 4 or 5 months ago, you're familiar with this practice known as steering. And steering is really agents working in their best interests as opposed to their buyer's best interests. So they steer their buyers towards the listings that pay them the most commission. Certainly not an ethical practice, but it's the reality of incentives.
Yeah, maybe just to add to that, Jeff, that with Bode, you have the choice of offering as much or as little buy-side commission as you want, which is really quite unique. You don't have that choice when you're listing your home with a traditional listing realtor. You will typically be encouraged to offer the typical amount. So with us, you get to choose, which is great because it's empowering our sellers to be in the driver's seat for selling their home. So again, you can offer anywhere from no buy-side commission all the way up to what is typical. And to Jeff's point, it's really a question of what you're trying to achieve as a seller. If you offer no buy-side commission, you know that there's a chance some realtors will steer their buyers away from your listing. If you offer closer to the typical end of the scale, you can be very confident that all those realtors are going to take their buyers to view your property. And then the last thing I'd maybe add to that is just ultimately what you offer and what you agree are two different things. So you can offer a certain amount of buy-side commission, but then still negotiate on that when it comes time to discuss the details of a specific offer. So just because you offer one amount doesn't mean that you can't agree to a different amount ultimately. And then the last question we sometimes get about that is, if you offer a buy-side commission, but then sell to a buyer who doesn't have a realtor, then you save all of that money. So you might have offered, I don't know, $10,000, but because there wasn't a buy-side realtor, that money never gets spent. So that just gets saved by the seller and the buyer.
Yeah, I was just going to add one recent example on this, Alan. We had a seller that was offering zero buy-side commission, and they received an offer, and it's not uncommon for the offer to include a term whereby the buyer does earn the commission, or the buyer's agent does earn a commission. And in this case, I think it was a $650,000 listing, and the offer came in at full list price, but it included this commission. And so the seller, as part of the negotiation said, well, effectively, my list price needs to be $662,000 if it's a full price offer. And so countered at a price that was actually higher than the list price, and the buyer and the buyer's agent agreed. So was able to sell over list by saying, net to me, the list price is actually higher if I'm to pay this buy-side commission.
Jumping into another question here, a question from Shelley. What is the likelihood of a buyer agreeing to a long settlement in Calgary market these days? We're building a house and may not be able to move until November or December, but we know our home shows much better in the summer. So would love to hear your thoughts. So yeah, I guess the example here is when they say a long settlement period, they mean a long possession period. So you agree to the sale in the summer, but perhaps don't take possession until November or December. So what's the likelihood of being able to agree a deal like that?
Yeah, so let's maybe cover a bit of background on that question. So typically we see possession dates about 45 days, maybe 60 days after a deal goes firm. So as soon as a property inspection is waived and financing is waived, we typically see about 6 weeks until possession. So I would say the chances of having a really long time to possession is rare in a balanced market, but in this market, your chances are actually really high. So the example that we put up earlier with this, that was a Cochrane listing. The seller was moving to the UK, and they knew that they wanted their son to finish high school, and they knew that they would not accept the possession date before, I think it was June 30th. So in this market, I'd say your chances of getting a deal that meets your timeline are much higher as a seller. Of course, the risk is that you might turn off some buyers. The reality is there's so many buyers that you'll probably find a buyer that it still works for. You might just have a bit smaller market, of buyers who, really want or also may need to move into a house in the next, call it 2 to 3 months, a more typical time frame. But in this market, if your home photographs really well and shows really well in the spring, then I would say, give it a shot. The other thing you might consider is, again, we pay for photos up front. If you know your house is going to photograph really, really well in May, we're happy to arrange those, keep them in your account, and you can always return to your listing. So you can get the photos done, have the listing all prepared, and decide to take it live anytime in the future.
Great. Keep your questions coming in here. I'll keep going through the list. Another question here about listing. How important is staging, and should we get professional help?
I'm a big advocate of staging. I've used it, I guess, in different ways over the years whenever I've sold property. I mean, it really depends on what you're starting with. So we have a lot of vacant listings with our builder partners, and we do stage some of those homes. We also use virtual staging. I remember when virtual staging first came out like 10 years ago, it looked horrible. Like, it was really bad. There was this plasma TV that you could clearly see was just an icon on top of an image. But that technology has really improved over the years, to the extent that we've had a number of inquiries from people on our listing saying, where did you get that couch? I love it, and I'd like to purchase it. And of course, it's just a digital rendering. So it's gotten really good if you're dealing with a vacant property. I think for most of our sellers, when it's a seller-occupied property, often you have good furniture that fits the space, and what you really just need is a little bit of help with accessories, right? Maybe adding some coffee tables, some vases, cushions, that type of thing. So it really depends on what your starting point is. Obviously, you want to depersonalize. The one thing we tell all of our sellers is, the minute you decide to list your home, it kind of ceases to be yours. It now belongs to the person who is going to buy it. So depersonalize and consider staging. We do have excellent stagers in our pro marketplace. And oftentimes you can get them to come out and just do a consult and learn about how they would approach your particular property.
Thanks, Jeff. I might just add to that if you are looking for stagers, Bode has a marketplace of home professionals for all kinds of different needs, whether you're looking for an appraiser, a home inspector, or a stager. So you can just head over to our website and take a look at the Pro Marketplace section. And there you'll be able to find stagers who service your local area, no matter where you are in Alberta or BC. And finally, if you want to discuss your staging options further, or if you want to discuss anything else, feel free to reach out to our team. There is another follow-up question here that maybe we'll just cover off quickly about the price of staging, Jeff. Obviously, that can be very variable depending on how long you have it, but any insights on the pricing of staging?
Yeah, so in a typical house, I think the last time we paid for a vacant, it varies so much, on size of the house and also how much you do. Like, typically, if you have a 4-bedroom house, you're not going to stage all 4 bedrooms. You would stage the master and you'd leave the other ones. Usually you'd stage a main floor, so kitchen, living room, den, that kind of thing. And then, of course, there's some staging companies will own their own furniture, and I would consider those staging companies to be quite high end, and they're often quite expensive. Others will, use furniture rental companies, and in that case, they kind of just pass the cost on to the seller. So your first month, let's just take a typical home. Maybe your first month is $3,000. And then once all the furniture is moved in, that rental cost is passed on to you. So, subsequent month might be 50% or $1,500 to keep that to keep that staging in place.
Yeah. And I guess an important part there, Jeff, is that you touched on, is obviously the way to keep your staging costs low is to not have to keep the home staged for too long. So the faster you can sell your home, the far lower your staging costs are going to be. Again, coming back to the importance of starting off with the right price that gets people interested in your home quickly. Next question here is from Sandy. So she asks, are there different strategies for selling condos in downtown Edmonton, for example? Has the condo real estate market rebounded as much as the home? So detached and attached.
Yeah, so the last 2 years, it's been a really bleak outlook for apartment style condos in Alberta. And what's really interesting about our market is that changed, and that changed really quickly. So in some of the markets, Calgary included, January 2022 saw more apartment sales than we've seen since 2007. So it has rebounded, and it's rebounded really quickly. So over the last 2 years, a lot of apartment sales were being sold for less than what the sellers had paid for them, and that's starting to come back. So I think as the detached and semi-detached market really takes off, it's becoming out of reach for a lot of buyers. You look back to that average home price in Canada, moving in 2 years from $500,000 to $750,000, that just prices a lot of folks out of the market. So they are, want to still be in property, and apartments are maybe their only means of doing that. So it's come back very quickly. Of course, pricing competitively is still important, but it's improved a lot in the last few months. One thing that we've noticed as a brokerage is there's a lot of investment property coming to market. Excuse me, sorry again.
No, while you're taking a quick sip there, Jeff, I'll just jump in to say, just on your point about how the apartment market's come back quite quickly. A big part of the reason for that, a lot of 2021 saw that there was a lot of supply, so a lot of apartments for sale. And sales were pretty good in 2021, but there was a lot of inventory to work through. And now, to your point about January and February numbers looking much more positive for apartments, I think a big part of the reason for that is because now the number of apartments for sale has finally come down lower than what it was for most of 2021. So that's a big part of the reason why that market's starting to look a little better. But then on the pricing front, prices for apartments, particularly in Edmonton, have been on a downward trend for many years, as you say, starting to stabilize a little bit more recently. But the trend in Edmonton over the long run there for apartments has been downward. Sorry, I'll let you get back to your thoughts.
No, the only thing I was going to add was just something that we noticed about 3 weeks ago that I thought was quite interesting, and it was that we're starting to see a lot of investment type product come to market, and that's true across all segments: detached, row, townhouse, and apartments. So, we're trying to dig into that and determine why that might be. And I look at it in, I think a lot of sellers would like to take advantage of this hot market and sell, but the problem is they look at what's available, they look at where they move, whether that's renting or buying, and there's nothing really on the market that works for them. So I think of people who live in their current home, they're in a lot of situations, they're entrenched. They know that, they'd love to take advantage of the hot market, but there's nothing else for them to buy or rent. So what we're seeing is a lot of investment property go to market, a lot of tenant occupied property. And that makes sense if you think about an investor's perspective. They may have been underwater on their investment for quite some time, and now they're taking advantage of this hot market to sell their investment product.
Fantastic. Another question here. This one's from Agnes, and it's a two-part question, so I'll just cover the first part first here. So in this hot market, what's the likelihood of selling without doing any renovation on a well-kept home in Scenic Acres Northwest? And in case it's important for context, it's a townhouse. So what's the likelihood of selling without doing any renovations on a well-kept home?
Yeah, I mean, it really just comes down to price, right? So let's say this house, not knowing the situation, let's say it desperately needs a renovation, right? Like, I'd say usually every 25 to 30 years, homes just are ready for new cabinetry and countertops and flooring. That's just the reality. But as long as it's priced accurately and reflects that need for an upgrade, I would say your probability of selling is very high. There's two buyers, right? There's the buyer that just wants to move in and have a turnkey property, but then there's the buyer that really wants to make a home their own. And in this case, your selections might not be what a buyer chooses. So in that case, a buyer, can choose exactly what granite they want and what cabinets they want. So yeah, it all comes down to price. As long as the price reflects the fact that, the seller understands that the home is ready for an upgrade, then I'd say chances of selling are very high. The other thing to keep in mind is that, because real estate has increased, the prices have increased so much very quickly, the number of buyers that you'll appeal to by keeping that price lower. But, let's just use round numbers. Let's say the renovated value of that home is $500,000 and the unrenovated value is $440,000. A lot more buyers can afford $440,000 than can afford $500,000. So you just are appealing to a larger market at that lower price. And maybe that buyer is prepared to live in that home for another 10 or 15 years without renovations.
I think it's a ton of insight there in your answer. Maybe just to cover off, the question was about the likelihood of selling, and maybe just to quickly mention, because I guess we were talking about likelihood of selling earlier on as well. With Bode, what we've seen over the last year, if we look at the most recent year of data, homes listed with Bode are almost 10% more likely to sell than homes listed with a realtor. So simply by listing with us, you've got a better chance of selling. And that ties together with another question here, which is about what Bode does to market to buyers and to find buyers. So maybe we'll just quickly cover that off as well. So at Bode, we don't just list your property on realtor.ca. We also list it on Zillow, on Kijiji, on our own site, and on thousands of other listing sites. So we're putting it absolutely everywhere online where buyers are looking. And then we're going much further than a realtor would to market your property by running targeted ads on Facebook and Instagram and elsewhere, targeting buyers who are likely to be interested in your specific property. So buyers will see an ad of your home, the exterior, interior, etc., and some key features of your home, and they'll be driven towards your listing. We also have a lot of buyers on our website, of course, browsing homes. We see a lot of traffic on our site, so you get all of the benefit of that extra traffic. So by doing all of that, we're able to generate more demand, more eyeballs on your listing, which is why our listings, again, not only are they 10% more likely to sell, but they typically sell for 1.3% higher prices. So just thought I'd mention that in answer to those two questions. And then the second part of Agnes's question there was about, will Bode walk us through the process of selling a townhouse property, as there is more involved than a primary home? So I'm guessing this townhouse must be a secondary property.
I wonder if the question is more pertaining to like a condo style as opposed to single family.
Maybe, yeah, or well, you can answer it that way, and then we can also answer it from the perspective of selling a secondary home versus selling a primary home.
Yeah, like I mentioned, a lot of our sellers that we're currently working with are investors. So the question we often get is just how to deal with tenants. So we have a guide that we're happy to share with all of our sellers about dealing with tenants as you're selling a property. they do have rights under the Residential Tenancies Act. So you want to make sure that you are following the law on this topic. The best thing is to be honest with your tenants that you have intention of selling, and how can you best work together. Oftentimes, sellers are selling with tenants in place. Tenants sometimes want to stay. The reason you want to keep good relations with your tenants is because if you are forced to follow the letter of the law, the letter of the Residential Tenancies Act, it's really cumbersome. So, if you have a viewing request, technically, if you're following the act, you need to go put a notice on the door 24 hours before the viewing. Of course, this never happens, right? It's a text message or a phone call to your tenant saying, I have this viewing request, can you accommodate? So you want to just keep good relations. Some of our sellers will offer to pay for a month's rent for the tenant to compensate for the burden of having viewings while they're living in the home. Sometimes they'll even pay for the first month's rent at the next place. But yeah, it's important to get clear if your tenants have a desire to stay. That can then be advertised. So a buyer might find that really attractive to know that there's a lease agreement in place. There's the tenant's willing to sign a new one for another year at say $2,200 a month. That could be really attractive to particular buyers. On the other topic, happy to help with really making our sellers understand all the requirements of selling a townhouse and what the condo documents are that would be required to do so.
Yep. Just to add to that, as Jeff mentioned, you can check out the guides for selling your home with tenants or selling a vacant home in our resource center. Take a look in the resource center on our website for lots of good information there. And if you do have any further questions, feel free to reach out to our team. Another question here on the same theme of selling a secondary home. It asks, is it still possible to use Bode if I don't live in the same city as the home I'm selling?
Yeah, definitely. We have had lots of sellers do this. The biggest thing is just how are you going to manage viewings, right? How are you going to manage viewing requests? Everything else can all be, quite digital online. A lot of our sellers have, a Vivint or a telesecurity system in place where they can remotely unlock doors for viewings. Of course, you have an option of putting a lockbox on. A lot of the lockboxes, you can change the code remotely, which is really nice. So that way, if someone accesses the property once for a viewing, it doesn't mean that they can access it again. So yeah, really managing the viewings is the most important aspect here. And we have some lockbox solutions, but ideally the best system is a home automation system, and a cherry on top would be to have a camera in place as well. If you have that camera, it's a added bonus of security.
Okay, we'll try to cover just two more questions here at time. How would Bode still work well for selling in a small town like Turner Valley?
Yeah, I mean, most of our sales have kind of occurred in urban centers, but we have done lots in small towns, and it works just as effective. And for the same reasons that you covered, Alan, we post listings everywhere, so it goes on Realtor.ca, it goes on Zillow, Kijiji, and Bode, and when you're exposed in that fashion, you're going to attract buyers really regardless of what market you're in.
What we often see is people in small towns too are more kind of do it yourself kind of people. So buyers I'm talking about here are often more likely to buy without a realtor in small towns, which again can create savings for both the sellers and buyers. So last question here, Jeff, that we have time for. What would a typical buy-side partial commission offer be in comparison to the traditional commission? So I guess the question is really asking what's, if you're not offering the typical amount, well, first of all, what is the typical amount? And if you're not offering that, what would be common?
Yeah, so the typical amount in Alberta is 3.5% on the first 100,000 and 1.5% on the balance. It's almost the same in BC. It's slightly different. But the way they calculate their commissions, it gets down to like the thousandths decimal place. So we won't cover that. So in Alberta, really simply 3.5 and 1.5. So we've seen sellers offer flat rate that are less than that typical commission. We've also seen sellers offer, really what you want to do is to offer a competitive enough commission that agents won't steer their buyers away. And in this market, buyers are on realtor.ca. They're doing their own due diligence. They're really doing a lot of the work themselves. So if it were me, I might consider offering less, but something close. So we've seen a lot of sellers offer 3 and 1. So 3% on the first 100,000, 1% on the balance. And in my mind, 19 out of 20 agents are still going to show that property. Yes, they're earning a little bit less, but it's not so much that they're willing to steer their buyers to a different option. A flat rate is another option. Of course, you have full control over this as part of the listing flow. You can select what commission you offer to cooperating brokerages. And in the flat rate, we see, I guess over the last few weeks, we've seen, $5,000 flat rates, $10,000 flat rates. And, these are still attractive commissions. The one thing to keep in mind is that an agent may still try to negotiate for a higher amount, but when they do that, then you can kind of tie it to the strength of the offer. So we often say, commissions are negotiable based on the merits of an offer, put forward. So, if you're on the market for a few weeks and an offer comes in and it stipulates a buy side commission payable, you can always just factor that in, much the way that you factor in the included goods or the possession date. You might have a possession date that works really well for you, but if the offer is pushing out several months, well, you factor that, and your price is adjusted based on those kind of variables.
Great. Well, we're over time, so I think that's all we're going to cover today, and lots more questions that we didn't get to. But for all of those people who do have questions, feel free to check out the resource center on our website. It's fully searchable by keywords. So if you have a question, have a look to see if you can find an answer in there. And if not, feel free to reach out to our team, of course, and you can do that directly on the website. And as Jeff said, we'll also be sending around a link where you can book a session with Jeff. So from my side, thanks everyone for attending. I really appreciate your questions and look forward to hopefully seeing you on a future webinar.
Absolutely. Thanks everyone for attending. Thanks, Alan. Thanks, Linz.
Yeah, thanks, Lindsay. Bye-bye.
Bye.